My mission with the Mortgage Report is simple: to save you money. I'm here to provide weekly insight into the market so you can make the best buying decision. I want you to know where interest rates are headed, and I promise to let you know my lock or float position. The Mortgage Report starts now. Hey everybody, I'm Bob Johnson, aka Bob Mortgage. Welcome to the Mortgage Report. I do this video update every week so you know what's going on in the market, and to help you make decisions as it relates to interest rates, so you know what to expect as you're out there shopping for a home. If you're in the market to buy a home and want to explore loan options and interest rates, give me a call at 214-631-5626 or tweet me at Bob N. Johnson. All right, let's jump right into this week's Mortgage Report. This past Friday marked the beginning of a Donald Trump presidency. As the nation prepares for a new administration, many are questioning the impact his presidency will have on the housing market. But our 45th president, he's a real estate tycoon. That has to be good news for housing, right? Well, there's a lot to consider. For instance, since Trump's election, mortgage rates have surged and pending home sales have dipped. I also remember reading that experts warned a Trump presidential election victory would cause the stock market to immediately plunge. Instead, a Trump rally set in, with the Dow up now more than 8% since Election Day. All right, back to housing. Here's 3 ways a Trump presidency may impact housing and home ownership in 2017. Deregulation. What will this administration do about the Consumer Financial Protection Bureau, the CFPB, and Dodd-Frank? I feel if this administration would reduce the impact the CFPB has around enforcement, which would lower the cost of compliance and streamline Dodd-Frank, we could see more lending opportunities for first-time homebuyers. Now, I'm not talking about mortgage lending that led to the housing crisis of 10 years ago. I'm talking about clarity around enforcement. Right now we have federal and state enforcement. Interpreting the two is like the song Blurred Lines. More money is spent on compliance interpreting the two sets of opposing guidelines and defending random lawsuits by the government on lending institutions versus protecting the consumer. Try explaining to the client the difference between a GFE, an LE, and a CD, the timing of delivery for each, and how it's supposed to make understanding their loans so much easier. Yeah, thanks Dodd-Frank. Less federal enforcement and more state oversight would lower compliance costs and make mortgage borrowing more affordable. Another item on the Republican agenda is to reduce the government footprint in the mortgage industry. That can mean moving Fannie Mae and Freddie Mac into the private sector. The two government-sponsored companies back a majority of mortgages where they were bailed out with taxpayer dollars during the housing crash. The quarterly profits that Fannie and Freddie earn are now funneled to the U.S. Treasury, which has been paid back about $60 billion more than it provided in bailout funding. Investors in Fannie and Freddie, I'm sure, want to see that money move back into the private sector. In November, Trump's Treasury Secretary nominee told Fox Business Network, "We got to get Fannie and Freddie out of government ownership." While I like that idea as a mortgage industry professional, I feel the U.S. government needs to at least stand behind the mortgage bonds we issue. We need that federal guarantee to strengthen the demand for bonds, which should free up capital for us to make more loans. Infrastructure spending. Will President Trump's plan to spend more money on infrastructure projects result in more laborers taking those jobs and leaving home builders and remodelers shorthanded? If that happens, labor shortages could result in rising wages, which in turn keeps home prices high. Mortgage rates have soared since Trump's won the election. That's part of a good news, bad news scenario. This increase in rates certainly impacts home ownership for first-time buyers. Increasing interest rates, however, often signal a strengthening economy. And if that's the case, gains in consumer confidence may lead to more first-time buyers qualifying. Increasing mortgage rates could also slow price appreciation, which could help home buyers. I'm seeing in 2017 a moving year because rates would still be in the 4s, which is still a very attractive mortgage rate. And if the Trump administration will take a look at the CFPB and Dodd-Frank, where they've grown too large or too expensive, that will certainly help the supply side of the home market. And I think that's good news for renters and prospective homebuyers, because adding supply is one of the major ways we can address housing affordability issues. America's need and desire for housing is just as great as ever. The population growth hasn't stopped. My generation and the one coming will still have a desire to own a home. So with all that being said, what's in store for mortgage rates this week? Well, just last Wednesday, Fed Chair Yellen said that they expect to raise the federal funds rate gradually until it reaches 3% by the year 2019. This was a faster pace than many investors expected, and that faster pace, along with Yellen's comments, pushed mortgage rates higher last week. So what's my position this week on interest rates? While I remain bullish on bonds, I still see some volatility left out there from last week. In the short term, the next 1 to 2 day locks, I'm taking a short position as I anticipate pricing to weaken, which could lead to higher rates. For the long term, 30-plus day locks, I'm taking a neutral position as I expect the market should stay close to open, plus or minus about 25 basis points. Bottom line, having been a mortgage advisor for the last 20 years, I'm always looking for ways to maximize your tax strategies, lower the amount of interest you pay, and deliver to you the right home loan product at the right price. If you're in the market to purchase a home or even considering a cash-out refinance, give me a call at the office. I've done this for 20 years and have been very blessed to provide financing to over 25,000 families. I'd love to help you with your home financing options. Your dream home may already be within your reach.